incredibly successful first half of the year. We've breached the 10 billion dirham revenue mark for the first time ever, which is fantastic, with an 11% growth versus last year on our top line, which demonstrates a real commitment to growth, I think, across, not just in Dubai, but across the world. And an EBITDA sort of growth of about 16%, which again, reflects the underlying operating profit that we're driving is great, and we're moving forwards. We decided to take some provisions in some of our businesses, international businesses, which mean that we're slightly below where we were this time last year from a profit before tax perspective. And of course, this year is the first year that we'll have corporation tax here in the UAE, so we'll absorb that 9% in our profit after tax numbers. But overall, our story is about continued growth, continued investment, and really pleased with the first half of the year. So the star has been cargo. The world cargo market is up about 9% on where it was this time last year. In fact, for us, it's 18% up. So we are seeing significant growth on the cargo side. That's globally. I could pinpoint places like the UK in particular has been very strong for us from a cargo perspective. Netherlands, so Europe has been strong. But here in Dubai, I think we've really seen the biggest growth. And we've seen trade coming in east to west, north to south, but also with the growth of Dubai itself, cargo reaching Dubai as its ultimate destination has been a major boost for us. Airport services, again, the growth overall of the aviation market's around 7%, and we're well in line with that. We're very pleased that we continue to expand our overseas business. We've had the go-ahead to now operate in Rome Fiumicino Airport, which is a massive investment for us, a €20 million investment coming our way, and that will be a major growth location for us, one of our biggest overseas airports. We've also expanded in the US into Raleigh-Durham, which, every new airport, we have over 20 airports in the US now, so that's continued to expand our portfolio, and we have some other exciting news in the second half of the year. Catering point of view, catering volumes are up, because the number of meals people consume is in line really with the passenger growth, so 7% passenger growth overall in the market, and we're falling into line with that. But the exciting part is our retail business, which is our new business line that we've sort of developed over the last 5 years. This is the onboard selling that we do on a number of our customer carriers, including Jetstar, Air Arabia, EasyJet. That business has grown much faster than even the traditional catering business, and we see that as a real sense of a new business starting to take shape and grow. And on the travel side, out of the Middle East, travel, and particularly Dubai, travel, with the growth of Dubai, travel continues to grow. But also, I think travel is number 3 on the list of what people like to spend their money on right now, if it comes after housing and food. So it's still right up there. Post-pandemic, people have really got the itch to travel. And so we're seeing that in the growth of all of our travel businesses, and both on the leisure and on the corporate side. It's a relatively new concept where an airline will outsource everything on board, everything they sell on board, to a service provider like Dnata. So we do the ordering, the stock taking, the menus, the training of the cabin crew, the point of sale machines. We collect the money and then effectively pay a profit share back to the airline. And that is really a full outsourcing of that onboard product. There's nobody really in the world apart from Dnata that does it to the scale that we do. And what we've seen is an extremely successful outcome of that. So, for example, passengers on one of our airlines used to spend around 42 cents a seat, and they're now spending £1 per seat. So we've managed to more than double the sales since we've taken over. And the critical part about it is what you do with the data. So it's not personal data, but it's saying, what does the average passenger consume on a flight from, say, Dubai to Karachi on a Monday morning? versus what does somebody consume on a flight from London to Paris on a Friday afternoon. And if you can really target exactly what they're going to be eating, drinking, buying, and load that on the aircraft, then you can really up the revenue per passenger. But also you can make it better for the passengers because the stock doesn't run out. We've all been on aircraft where we've said, oh, I'd really like a sandwich, and they say, oh, sorry, but we don't have any sandwiches left. Well, now with that data, we can really target what people want. The low cost and the ultra low cost carriers. But I can see this, it's such a successful model. We're now starting to talk to other carriers about maybe in the economy cabins that we could start to deliver a sort of a more buy on board type product, and they'll obviously make the decision themselves. It looks like passenger demand is going to continue. The growth story is going to continue. The cargo story we think will continue also. And so second half of the year we're looking at extremely positive sort of progression from where we are now, and hopefully by the end of the year we'll be hitting record numbers in terms of the top line and indeed profitability. So very, very positive. Obviously it's not without its headwinds. We've still got the unfortunate wars going on in the Middle East and in Ukraine, which we'll have to navigate. And of course, I think this year has been the year where there's been the most elections ever in the democratic world, and of course some big recent elections may impact on trade and the sort of the globalization, and we're going to have to adapt to that. But we're very lucky because we're globally diverse, where there are some wins in some areas, there's some losses in others. Overall, we win. It has slightly, yes. I mean, obviously there's a headwind, when you think of places, we've got big operations in Iraq and in Jordan, where airlines have had to periodically stop flying, and that impacts on us. But overall, I think on balance, those are relatively small parts of our business, and we've been able to adapt to those. Certainly what it has done is forced more air cargo, or resulted in more air cargo, because some of the shipping lanes have been closed, and that has worked to our benefit. So overall, I think it's probably neutral, but certainly something that we have to consider every day, not just for our business, but for the people that are working in those locations.